Good morning, everyone, and welcome to the first of our Access to Finance Funding Future Growth webinar series, delivered in partnership by Chartered Accountants Ulster Society and British Business Bank. For those of you that don't know me, my name is Susan Nightingale, and I have the pleasure this morning of welcoming you both in my capacity as Senior Manager for Northern Ireland within the British Business Bank, but also on behalf of the Institute as a member of both the main and public sector committees within the Ulster Society. As I said, this is the first in a series of Access to Finance webinars that will be delivered virtually over the coming weeks, with the sessions designed to explore the range of finance options available to SMEs who have an ambition to either scale or start a business. Today, we focus solely on debt finance, so whether you are advising SME clients, an FD seeking to raise finance within a company, or a lender providing some of these finance solutions, by the end of this session, I want you to have a greater understanding and awareness of four things. Firstly, the range of debt finance options available. Secondly, the range of providers operating in the marketplace. Thirdly, how the various funding options complement each other and can be blended together. And finally, the increasing importance of net zero when it comes to funding applications. So we can then say with confidence that SMEs are getting access to the finance that is best suited to their needs, rather than just the one they or you are most comfortable with. So in terms of today's agenda, I will open with a brief overview of BBB and the work we do to improve access to finance for SMEs across the UK and here in NI. We'll then take a closer look at the debt finance options available to startup and micro SMEs, namely the BBB Startup Loan Programme and the Invest NI-backed NI Small Business Loan Fund. So during this session, we'll hear from Richard Bearman, MD of Small Business Lending for BBB, Michael McQuillan, CEO of Enterprise NI, Will Smith and Rosanna Bothwell as business owners who have benefited from startup loan funding, and Donal Leahy, Senior Lending Executive with NI Small Business Loan Fund. At 11 then, we'll take a quick 5-minute comfort break before coming back to a panel discussion chaired by Mark Sterrett, UK Network Director with BBB, looking at debt options to grow and scale a business. During the panel, Ronan Harper, CEO of Pivotal, will share their growth story. Funders Una Warnock of White Rock Finance and Gavin Campbell of Barclays will share what attracted them to invest in this high growth business. And AJ Sharma of CS Finance will talk about the role of brokers and how they can open the door to a range of finance options and providers. We'll then hear from Jennifer Tankard of UK Finance on how the debt finance industry is supporting SMEs in their transition to net zero, before closing with an update from Alan Wardlow on the range of working capital finance solutions available from Upstream. So an absolute jam-packed session that hopefully you'll find both educational and engaging. And as we run through the various sessions, please feel free to post questions in the Q&A function and we can pick those up as we go. So BBB, who are we and what do we do? So whilst I work closely with a number of advisors and intermediaries on a daily basis, many of whom will be on this call, appreciate there's a number of you who will either not have come across BBB before or have only come across the name in relation to the COVID-19 support schemes such as Bounce Back and Seables. So with that in mind, I thought it would be useful just to spend a few minutes giving you a very brief introduction to the organisation, just in terms of who we are and what we do. So our mission, in very simple terms, is to drive sustainable growth and prosperity across the UK and to enable the transition to a net zero economy by improving access to finance for smaller businesses. So who we are, established back in 2014, we're the UK Government Economic Development Bank. We're not a bank as such in that we don't have a banking licence or customers that we lend to or invest in directly. Instead, we work alongside over 180 delivery partners such as banks, leasing companies, venture capital funds and other web-based platforms who do this on our behalf and who, because they work with us, can lend and invest more, especially to younger and faster growing companies. So in terms of our objectives, We work not only to increase the supply of finance for smaller businesses, but also to create a more diverse finance market, offering a greater choice of finance options and providers alike. Essentially providing accessible finance options for businesses that don't tick the boxes for a standard overdraft or term loan from their high street bank, whether that be startup loan, angel finance, or venture capital funding. Another key focus of our work is to identify and help reduce regional imbalances in access to finance, so that regardless of your geography, whether you're based in Omagh, Ballymena, or the Golden Triangle in London, as an entrepreneur, you have the same level of knowledge and opportunity when it comes to accessing finance to grow your business. Then with that knowledge of the various funding options, we seek to educate SMEs to encourage them and enable them to seek the most appropriate form of finance for them, that which is best suited to their individual needs at a particular point in time of their growth journey. We're very much seen as the centre of expertise on small business finance in the UK, sharing on the ground intel with government to help shape future policy, but also responsible for a number of research publications throughout the year, including the Small Business Finance Markets Report released annually in February, and the Entrepreneurship and Diversity publication Alone Together, which we launched in October of last year and shone a light on the barriers facing female and BM entrepreneurs across the UK. We do all of this while efficiently managing the taxpayers' money. And last but by no means least, with a recent addition is our objective to support the UK's transition to a net zero economy. So the role of the UK network team, the UK network team is divided into 4 sub-teams. Firstly, 3 field teams, of which the Devolves Nations is one, who essentially act as the eyes and ears of the bank and work with a range of senior level stakeholders across both public and private sector to identify and understand access to finance challenges faced by SMEs across the different regions and nations of the UK. Secondly, then, a central team who publish reports based on the field team intel, which are then used to help inform decision making both internally within the bank and then ultimately within government. So if we look then at the supply side of the equation and the various programs we have in operation, on the debt side, we have our Startup Loans program, which you'll hear more about in the next session. We have our regional funds, such as 500 million Northern Powerhouse Investment Fund, the 250 million Midlands Engine Investment Fund, 40 million Cornwall and Isle of Scilly Investment Fund, and our own 30 million NI Growth Finance Fund here in NI. All of which offer a range of microfinance and debt finance to high growth SMEs in that particular region. We have the Recovery Loan Scheme, which launched in April 2021 to replace the COVID-19 loan schemes and currently running to the 31st of December 21, provides asset, invoice, overdraft and loan finance of up to 10 million and unlocks lending to borrowers otherwise excluded due to lack of collateral. And then finally, on the debt side, we have our Enable funding and guarantee programs designed to help new challenger banks and alternative lenders grow their SME loan book and reduce the cost of capital to encourage more SME lending. Equity solutions then, similarly on the equity supply side, our support kicks in at the seed stage through our Regional Angel programme. It's a £100 million programme which invests alongside angel investors, and as the name suggests, operates with a focus of reducing regional equity gaps. To date, 85 million of the 100 is committed, and I'm pleased to say 10 million of that was here in NI through co-fund. On the venture solutions side, we have the regional funds referred to in the previous slide, all of which include a large proportion of equity finance, and also our enterprise capital funds. So ECF is a £1 billion programme aimed at increasing the supply of equity finance to early stage UK high growth companies, while simultaneously lowering barriers of entry for new and emerging venture fund managers. And then within British Patient Capital, or BPC, which is the commercial arm of the bank, we have a range of programmes including Future Front Breakthrough, a £375 million programme focused on supporting R&D intensive companies within the UK, and a dedicated life sciences programme with 200 million available to make cornerstone commitments to later stage life sciences venture growth funds. So whilst we won't get into the detail of any of these equity supply side solutions today, we will be taking a closer look at some of these programmes in next week's session, which will focus on equity finance for scaling companies. So please keep that in mind and sign up if you haven't already done so. So then just looking at how this translates from a Northern Ireland perspective, as I said previously, we don't invest or lend the money directly to SMEs. So a lot of the time people aren't always aware of our involvement. And startup loans, I think, is a perfect example of this. So whilst funded by BBB, it's delivered on the ground here by Enterprise NI. It's an invaluable source of finance for early stage startups, and since launching in 2012, we've supported over 1,300 businesses and approved 11 million in funding to NI SMEs. The Growth Finance Fund, delivered on the ground by White Rock, is another example of our investment in Northern Ireland, partnering alongside Invest NI and Nilgos. This is a £30 million fund providing loans of between 500k and 2 million to high growth potential businesses with an identified funding gap. And then a more recent investment in March of this year was our £10 million commitment to co-fund again alongside Invest NI, and that was through the Regional Angels programme. If we look specifically at the COVID-19 response schemes, in NI we delivered almost 45,000 loans, totaling in excess of 2 billion, and then 13 future fund investments, which provided convertible loan notes of 11.6 million to highly innovative companies who typically relied on equity investment. So as you can see, large volumes of money accessible to NI companies across a variety of finance options and a variety of finance providers. So that concludes my whistle-stop tour of BBB. Thanks for listening, and please, if you have any questions or would like to know more about any of the programmes mentioned, feel free to reach out to me on the email address provided. I'll now hand you over to Richard Bearman, Managing Director of Small Business Lending within BBB, to give an overview of our Startup Loans programme. Richard, over to you.
Thank you very much. Good morning all. Allow me to try and go through the process of sharing. So I'm hopeful that you can see my slides. Susan, can you just confirm that my slides are up?
Sorry, Richard, no, not yet.
Oh, okay. That's slightly worrying. Try again.
There we go.
So sorry about that. So good morning, everybody. So yes, Richard Bearman. I'm Director at British Business Bank for Small Business Lending, and really proud to have in my part of my role to look after startup loans. Startup loans is a classic. It does what it says. It's a scheme that is there to support early stage and startup businesses. An area which is particularly sort of challenged in accessing funding. I've got a few slides. I won't read them through word for word, and I'll sort of talk around them. But Startup Loans is a scheme where we offer effectively a single product which is up to £25,000, which is effectively is a personal loan for business purposes at a flat 6% interest rate. And particularly important is also that we wrap a considerable amount of support around the entrepreneur, as well as providing the funding. And that's both in terms of pre-loan support. So we work with the entrepreneur to help them with their application, to help them with their business plan, to help them understand cash flow, that kind of thing, to effectively get them credit ready. And then obviously we get the funding to them, and then we provide support, post-loan support. So in the most traditional ways of mentoring, so all our applicants can access a mentor, but increasingly a sort of wider range of other support that entrepreneur can take to give them the best chance of success. The process, or the way we do that, and it sort of builds on what you've already heard, is We work through our delivery partners. We have 23 delivery partners now across the UK, where our delivery partners are really our face to market almost. They are the organisations that provide that coastline support and provide the mentoring and provide ultimately the process to access the funding. And it works really well in the sense that we have a different range of delivery partners that provide slightly different services and slightly different interactions, and most importantly, that local, that regional understanding of what's going on in their business communities. And as the primary aim of startup loans is to ensure that viable startups and early stage businesses have access to finance, that ability to have organisations that are on the ground makes a big difference in understanding, as I say, the local challenges and then overcoming those challenges. I think also worth drawing out is it's startups and up to 2-year-old businesses. Always difficult to say, well, where does a startup stop and start? But actually, I think it's early stage businesses that need the support, and they're the businesses that struggle with access to finance in the sort of mainstream of the UK economy. There's a few sort of website sort of points there on the slide, but essentially we provide guides on a whole host of subjects, and again, it's part of that offering to not just provide the funding, to provide information, support, and actually confidence to the entrepreneurs to start. And I feel that the magic of startup loans isn't necessarily the funding and isn't necessarily the access to funding. It's actually the fact that we, either through our digital tools or actually more often than not through the business advisors that our delivery partners have, they actually spend the time and effectively give the confidence to the entrepreneur to move to that next stage of actually getting funding to invest in their business. So the scheme has been successful over the years. It's as you can see here, sort of over 87,000 businesses have been supported. And I think what's particularly interesting and particularly sort of pleasing for me is we really have moved on in the last 18 months and had some record sort of years of performance for us. And I think that's been really a powerful testament to the scheme, that at a time when people were uncertain and perhaps didn't have the confidence, were either furloughed, just working at home, thinking about sort of next stage in their life and going through the uncertainty of the last 18 months, a lot of people have sort of started to think about changing their lifestyle, changing their careers and starting a business. And I think it's great that we'd be able to be there to support them through that. And essentially that's demonstrated by, as I say, by having a record performance last year and on track to have an even stronger performance this year. I think sort of obviously we're sort of looking at the different regions. And I've got a couple of slides here really just sort of highlight where the funds are going, but also that I think from a Northern Ireland perspective, there is capacity for growth within the scheme. I'm pleased that over 1,300 sort of businesses have been supported, but I think that what it's also saying is that there is that capacity. We are keen to continue and to expand our involvement and our support for businesses in Northern Ireland. I think that's sort of a comparable sort of slide just showing the kind of the regional breakdown. There'll be some press coverage actually from today, and it's been really well received. Press coverage that's highlighting we've reached another benchmark for the scheme, which is over £600 million of debt provided outside of London. And that's not to say that London's not important for the scheme. It's clearly a big engine for startups, but clearly ensuring that our support is across the UK, particularly to support business, communities and parts of the UK where perhaps access to funding is a little bit more challenging is a key sort of element of importance for us. And I think that threshold of 600 million outside of London is something again that we're very, very proud of and just sharing across news organisations from today. And I think the sort of the other sort of build out on that, it is that sort of that social impact of startup loans. it's important for us to get funds out, but also important for us to sort of understand where those funds are going. And because of that delivery through the delivery partner network, where we've got a range of different delivery partners, some of whom they are more volume orientated, and they will deliver loans and work with customers across the UK, but also at the other end of the spectrum, we have, as I say, very much regionally focused delivery partners that really understand their communities and their challenges, all the way down to specialist delivery partners, such as Prince's Trust, who support young entrepreneurs. And what it means is we're able to actually have a sort of a considerable social impact. And then just a few stats here to be drawn out. If 30% of loans go to people that were formerly unemployed or economically inactive, 40% went to women, and just over 20% of our loan recipients are Black, Asian, or people from other ethnic minorities. And all of those are sort of well above the kind of what's the natural startup rate, because of the challenges different communities face. So it's something we're really proud of, that social impact. And I think at the bottom there is also that it draws it out that the economic benefits of startup loans are, as it says there, almost 6 times its economic cost, which essentially goes back to that same point, that it's a scheme that not only is successfully getting the funding out, but actually getting the funding out to the right parts of the community to drive growth in areas that perhaps in the past have not had access to funds in the way that the other communities or parts of the country have experienced. I mentioned the support we provide, and something that we're particularly proud of, particularly pleased that we've been able to do over the last 12 months, is a partnership with the Open University called Learn with Startup Loans. And essentially, it's a way of accepting and acknowledging the different ways people are absorbing and learning and developing, and also that reality that for many entrepreneurs, they may well have a skill or an area that they have expertise in when they start a business, but more often than not, there's huge knowledge gaps, and there's areas around running a business that can be really quite challenging for them. And actually helping people to develop themselves is something that gives it a much bigger chance of success, or so we believe. And so we formed this partnership with Open University, where we've curated and developed with them a whole series of modules so the entrepreneur can invest in themselves, can really spend time building out their skill sets in the areas that might challenge them. So, it might be bookkeeping, it might be to do with net zero, it might be about communication, social media. And we've got a whole series of modules that are free to our customers and to our applicants. And they vary from sort of 3 to 4 hour courses up to 16, 17 hour sort of modules. But as I said, really designed to help that entrepreneur build out their skill set, their knowledge, and give them the absolute best chance for success. I think I'm going to take a couple of questions, but I think I'll just sort of wrap up that I know that in a bit we're going to hear from some startup loan recipients, and we'll talk a little bit more, I think, in that session about actually what's the process, how does it work. But I think that the key elements to sort of take away are that it's funding that's available across all sectors. It's very much designed to be open to all, albeit we try to focus our delivery partners, or we focus on our attentions, our communication, to really make sure we're supporting those sort of left behind communities or that are furthest from finance. And a key element of the scheme isn't just that funding, it is the support, and the fact that we have those delivery partners have their business advisors sort of on the ground or on the phone there to give support to the entrepreneur, to help them with the process, and as I say, give them the confidence to take what I think for many people is a big step in borrowing money to invest in business. And while it's been successful over the last few years, we really do hope for and expect sort of considerable growth and success in the years to come. Susan, I think you had a couple of questions.
Super, thanks, Richard. Yeah. It's great to see the positive impact it's having right across the UK. Can I just pick up with the Learn with Startup Loans partnership with Open University? I know this has been a reasonably recent addition to the overall product offering, but curious to know what the feedback on this has been so far. Has that been well received by the network of delivery partners and the startups themselves?
Yeah, I think particularly the startups. So it's always difficult to judge how successful these are, but I think a great sign is how Open University have reacted, because for them clearly they're investing time and effort and energy into this, and the response of our applicants is a good guide to them about is it valuable for them, and they are particularly pleased to the extent that they've expanded the modules quite considerably. We've agreed a whole new set of additional modules which have just come online, and so I think kind of for me the fact that what they're seeing is a flow through of inquiries and interest leading to people that are taking the modules, I think is testament to its success. It's probably about a month out of date, but last month, and it is still very early. Over 1,000 people have completed their entire sort of training module, which I think is great. But more importantly, tens of that, in fact, hundreds of thousands of people are looking at the modules and exploring them, and they might be dipping in and dipping out. And I think it's for me what comes across when we talk to delivery partners is it's such a powerful tool for the delivery partner to let that entrepreneur know it's there. And it might not be something they take immediately, but knowing that when they hit that barrier or hit that challenge, that they can turn to this and get that training and that development for themselves to hopefully help them get through that barrier or make the most of the opportunity, I think is a really powerful tool for the delivery partners to use when they're talking to the entrepreneurs, but for the entrepreneurs themselves.
Yeah, definitely goes well beyond the money landed into the bank account for sure.
Yeah.
You talked about the record performance last year and the strong pipeline of activity for the coming year. Does that uplift in activity levels, does that translate across in terms of the level of government funding that's available to support the initiative?
Yeah, so we had an increase in funding for this year. So essentially an increase of broadly 1,000 additional loans for this financial year. So we received additional funding from government there. And like many, we're waiting with bated breath for the spending review to come in the autumn. And I'd be hopeful that support would continue and expand. But yes, we have additional funding this year, which was great news when we received that.
Super. Okay, well, look, thanks, Richard. It's great to see such strong levels of activity despite the challenges of COVID, and great to know that the additional funding has been secured. On that positive note, we'll move on to the next session. Thanks, Richard.
Thank you.
So I'd like to spend the next 20 minutes or so looking at the delivery and uptake of startup loans specifically within Northern Ireland. I'm pleased to say we're joined this morning by our NI delivery partner, Michael McQuillan of Enterprise NI, and two of our local startup loan recipients, Rosanna Bothwell and Will Smith. So before anyone gets too excited, it's Will Smith of Woodwork by Will rather than Fresh Prince of Bel-Air. Welcome all, and thanks for taking part today. To kick us off, can I ask each of you just to give us a brief intro in terms of yourself and your business? Rosanna, I'll come to you first, if that's okay, and then Will and Michael.
Yeah, so I'm Rosanna Bothwell, and it was my sister and I actually went into partnership and made use of the startup loan very recently. And it's an equestrian and country wear clothing shop. So we've started out online mainly due to COVID and lockdowns and all that. But at the moment we are looking to possibly take on a retail unit over the next couple of months. So. Excellent, thank you.
Will?
Yeah, my company is Woodwork by Will. It's basically just bespoke indoor and outdoor furnishings, from smaller units to larger built-in units, kitchens, things like that. It's the whole process from idea to sketching out a design, consultations, build, installation, everything. So that sums it up.
Perfect, thank you. And Michael?
Morning everyone, Michael McQuillan, CEO at Enterprise Northern Ireland. We're the umbrella organisation supporting the 28 local enterprise agencies throughout Northern Ireland, where we have about 2,500 supported tenant businesses across about 2.7 million square feet of workspace. We also manage on a day-to-day basis the Northern Ireland-wide startup programme, Go For It, and the Northern Ireland-wide pre-enterprise programme, and then a lot of sub-regional programmes of business support also. We are the delivery partner, as Richard referred to earlier on, of Startup Loans in Northern Ireland. And we're also the delivery partner of the Northern Ireland Small Business Loan Fund. There's a colleague, Donal, joining us later on this morning on that. And we act as the voice for micro businesses, small businesses, self-employed, and for entrepreneurship. We're just about to launch the 3rd annual Northern Ireland Enterprise Barometer, which is the biggest deep dive of the sense and opinions and confidence in the micro, small, and self-employed business sector. So looking forward to today's engagement.
Plenty to keep you busy then, Michael.
Plenty.
Okay, Michael, so just start with you from a Northern Ireland perspective, as the increased activity that Richard referred to across the UK, have you seen that replicated here in NI?
We have been experiencing, what I would describe as a sort of solid increase, sort of inquiries in general, information and guidance for what I call pre-enterprisers and startups. And that's right across our network at all sort of points of entry. And that sort of raised general inquiry level has then also materialized in the National Startup Programme, Go For It. Now, quick, I suppose, fast track back to March 2020 when we all went into turmoil when the pandemic hit. There was a bit of a downturn in inquiries to the startup programme at that stage. But since about autumn of last year, at this time last year, maybe October, November last year, inquiries started to go on the increase at that point in time. And quite interestingly, that has continued in July and August, just past, when we would traditionally see a seasonal dip in inquiries from startups and pre-enterprisers. It has kept robust. We'd actually one of the busiest Julys of startup inquiries in recent years. And the makeup of those, Susan, I think that, alongside that sort of natural sort of traditional flow of startups, passionate people wanting to generate value from their product or their service or their idea, we've seen an increase in, Richard referred to some of this earlier on, we've seen an increase in some people sort of starting side hustles, if you like, when on furlough. And then we've seen an increase in a number of people that sort of taking their side hustles that were pre-existing and just taking the time to go to the next level of their journey and doing that on a full-time basis. We're hearing from many of them, we've had an opportunity to reevaluate our lives and now it's time to go it alone. So there's an increase in that. And then there has been maybe a slight increase in what we call necessity entrepreneurship. Unfortunately, those people that have maybe lost their jobs or whatever, but that's always been in the past a stimulus for many startups and entrepreneurs as well. So yep, we see that growth in both interest and actual startups that Richard referred to. Will and Rosanna, looking forward to hearing more from them, because they're two great examples of COVID entrepreneurs who really took their idea and their businesses to the next level during this year.
Yeah, it's good to know that there's been some positive outcomes of COVID along the way. Michael, I'll stick with you just for one more if I can before I move on to Will and Rosanna. Can you talk us through the application process and the type of information required? I suppose more importantly, what the accountants and advisors that are listening today can do to get their clients' application ready or improve their chances of success.
Okay, maybe this is informational. If I don't cover the questions that you have in your head, folks, stick it into the wee question section in the chat box and we'll address it later. But with startup loans are accessible to businesses who, I suppose, from a time-wise are sort of immediately pre-enterprise, but they must have a viable idea, to being 2 years in existence, 2 years trading. So it's that a very early stage. I think it's important to note that it is a personal loan for business use, and if successful, the monies will be dispersed into a personal bank account, and supporting someone getting to the stage of disbursement. Essentially they must have that in place. There's an online application form. It's fairly complicated. There's a fair bit in it. And alongside that, the applicant needs to have a completed, up-to-date accurate, strong business plan, and a cash flow forecast, a good, accurate and well-informed cash flow forecast. And they also then, the third sort of key document is that they must complete a personal survival budget. It's really important that the information is there, has been sourced, has been found, has been picked up by the applicant, and that it's up to date as well. Now, Startup Loans is a responsible lender. We have team members here. We're the partner provider in Northern Ireland. We have team members and mentors who will help the applicants create those documents either from scratch, or if it's there just as a sort of a content check or a sense check as they complete those documents. The three sort of key areas, therefore, that are looked at from an assessment point of view. So, intermediaries and mentors working with the applicants to get them ready, I suppose should bear this in mind, that and again, it's from the point of view that Startup Loans is a responsible lender. What's looked at is the personal affordability. It is a personal loan for business purposes. So through that personal survival budget, the applicant must provide the information to show that their personal ins and outs on a monthly basis means that they can personally financially survive alongside the ups and downs of running the business and the repayments of the loan and the interest. Just a note at that point in time, the Startup Loan, it's a non-secured loan. It doesn't require security. A second area that they look at and that the information and documentation needs to be accurate for is the business viability. And that's done primarily through those two sort of key work documents, an accurate business plan, a well-constructed business plan around the viable business idea, and an accurate cash flow forecast. So it's essential that they're well constructed, well put together, and up to date. And the third check is there is a credit check, the credit worthiness. Again, because of the responsible lending aspect, a credit worthiness credit check is carried out. And maybe a poor credit history won't always mean that the loan is not granted in all instances. But really, Startup Loans there is basically ensuring that the applicant is not overburdening themselves with debt. Remember, it is a personal loan for private use. From our point of view, a big pipeline source for Startup Loans comes through the Go For It program, the National Startup Program. And through that, the business advisor can assist with business plan development and the cash flow development. In many cases, then that business advisor can remain as the client's mentor post disbursement. But I suppose the key thing is the more of that documentation that is in place and that is accurate as the applicant approaches the application process, their readiness for the process will then the more efficient and the quicker the process will be.
Okay, good. So there's plenty that the advisors could be doing to help along with that process. Well, I'd like to bring you in here. Just if you could talk us through your experience of the application process and just how important it is, as Michael said, to have that right documentation to hand and to be application ready.
Yeah, sure, of course. I mean, well, what definitely stood out for me was the time difference in the first and second application. So the way it works is, I believe you can, obtain a loan and then you can get a top up for that. So that's what I did. I had that sort of strategy in mind because of I wanted to see what machinery and things I needed first before I actually went ahead and applied for funding for them. So first time round, I got the documentation together, and that was with a mentor from Enterprise NI. So that was good. And to be honest, then there was a couple of bounce backs and things like that because my, the bank statements I had sent were in a different format and things like this. And long story short, took about 2 or 3 weeks to get the whole process sort of submitted. Second time around took about 2 or 3 days because I had a clear list of what I needed, and that made all the difference, you know, because I understood exactly what that list was as well. So, you know, what sort of format documents need to be in, things like that. So definitely being prepared for it just made it 10 times easier. I can imagine that's what's quite off-putting for a lot of people applying for funding. Oh, I'll never get 6 months bank statements, I'll never get this, I'll never get, you know. It's actually very simple whenever it's laid out in front of you. So definitely preparation it just makes it 10 million times easier.
Yeah, so I think the message there is that the more prepared you are, the quicker the money's going to land in the bank account. Can I ask you, Will, what made you choose startup loans over other finance options available to you? You know, great if you can share with us then just what that funding has enabled you to achieve in terms of business growth as well.
Yeah, sure, no worries. I mean, initially, just from lack of knowledge of resources out there, I had been looking at my bank and credit cards and things like that, and you know, to get machinery of up to about £6,000, and you know, of course, credit cards, interest rates, everything, just ridiculously high, and just not great for a startup business. But then, you know, I came across startup loans and things like that, and it has, you know, the very, very, very low interest rate and clear repayment things, which I like. I'm very OCD with my finances in that way, so it was good, you know. It just sort of set out a structure over the next 2 years of where I'm going to be at, and that was good as well. So, you know, definitely a massive help there, rather than getting roped into something where most of what you're paying back is interest. So yeah, I mean, that was that, and it just allowed me to get the machinery that I needed. You know, like at the very start, you're sort of finding your feet and what you're going to do and what you're going to need, and especially with something like furniture making, you just you're not sure until you start what you need, if that makes sense. So yeah, fast forwarded me like 12 months just being able to actually process bigger things, because at the very start I was making chopping board. This is January, by the way. I was making chopping boards and small scale items just, and then now I'm actually doing kitchens and things like that, because of literally the 2 machines that I got enabled me to process larger materials, do it quicker, and yeah, just keep my foot in the accelerator with everything, really. And you know, funding can be a massive problem for that. You've got this vision, but you can't do it. So that definitely helps to get that started and keep it going.
Critical into reality.
Yeah, no, definitely.
And talk to me a little bit, Will, about the mentoring support that you've received. How has that benefited you in your business?
Well, initially it was great, because when you go to start a company, you know, I've worked in businesses before, business development, stuff like that. There's so many departments like in a business when it comes to finance and things like that, and they basically get your head cleared, break everything apart, and tell you what to prioritize, which definitely helps, you know, because it can become quite overwhelming and stuff like that. And yeah, so the mentoring initially for, you know, the financial plans, business plans, what I should be charging if I want to make X amount, and, you know, just, I mean, it was all there, and that was great, you know. And then obviously the funding came in and things like that, and then it was continued support. So initially, like, I would be sitting there in the evening and I'd be thinking, oh, I don't have insurance, what if I cut my fingers off, you know? So then I would ring the next day and get a call set up, and we'd go through insurance and legalities and public liability, you know. So any sort of area where you feel you're lacking as well, you can reach out and they'll focus the mentoring on that specific area as well as yeah.
Just highlighting then that mentoring support doesn't cut off once the money's in your bank account. That's there for 12 months then after the loan's granted. Thanks, Will. Rosanna, just to bring you in, I know your situation's slightly different from Will's in that you operate Rolex as a partnership as opposed to a sole trader. How did this impact on the amount of money you were able to borrow?
Yeah, so by doing it as a partnership, we were both able to fill out an application and both borrow the same amount of money. So it actually doubled what we were able to get. which was important for us because a lot of the brands we were looking to work with, you have to buy, say, maybe a minimum of £5,000 worth of stock. They had, like, a lot of them have requirements. So we knew we needed quite a chunk of money to get going and to secure the brands that we were looking for. So basically, we both did the application side by side, the business plan, most of the documents that had to be done worked for both of us. So we were able to upload the same information, but also both get the loan basically to get the business up and running. And without it, it wouldn't have happened. We really couldn't have got started, because we couldn't have bought our stock. And second of all, we needed it to get our website up and going, to get going on social media platforms and really get going online when we were going through the COVID and the lockdowns and things like that. So it would have delayed us had we not been able to go down that route as a partnership to get, it was around, maybe 14,000 each roughly we got to be able to get going on that, foot and get the brands that we wanted.
Just short of 30,000 is a significant cash injection for a startup business. It's good to know that level of finance is available.
Yeah.
Rosanna, can I just, as two female founders applying to startup loans, what was your experience from that side of it? Is it a path that you'd recommend, I guess, to other female founders? Because we often sometimes hear that female business owners can struggle with access and finance to start a business. So just curious to know what your experience from the startup loan perspective is.
We got on very well. So initially we rang Invest NI, and they actually directed us through to the Go For It program because we weren't actually aware of the startup loan option. So the Go For It program put us in touch with our mentor, who then came on to help us with our business plan. But it was actually all of that then led us to the startup loan because they were able to guide us on that. So actually we had no idea about any of that until we had contacted Invest NI. But once we got speaking to our mentor, who helped us through the whole application process and guided us and gave us templates and whatever we needed, it was a very easy experience. But I know that if we had to do it on our own, it would have been completely different because there was things like on the application, because we're a partnership, we had to put in like a partnership agreement and things like that, which we really would have had no idea or really wouldn't have known who to ask for help on that. So the whole process was much better with the support that was given in the background to get to securing the loan. So definitely
a big thing for
huge, because we had tried.
Yeah,
we had tried other finance options, but it just wasn't available at the banks or whatever. So we just didn't really know what other options we had until we had tried the Go For It program. So
we do often sometimes hear that female founders can struggle with access to finance. So it's good to know that this program essentially provides that mentoring and that hand holding, if you like, to give that extra bit of confidence as you move through.
Absolutely.
And just in terms of the mentoring support for you, how has that impacted you and your business?
So, and now when we're out of lockdown and things like that, we've been using the mentoring again because we want to look into possibly getting a retail unit. So it has been very helpful because we're now going through the figures to look at how much it's going to cost to have the retail unit, and to have that support in the background is great because it just gives you that person that you can call up to ask about insurance, to ask about rent, and the legalities surrounding renting premises or whatever, because we've never done it before, so it's very new to us. Even to know like what rent they're looking, is that reasonable, or are they too high or too low? Should the property be turnkey ready for us to move in? So all those issues that we really don't know very much about, our mentor is guiding us with them because he has knowledge in all of that. So it's definitely very, very useful, and we're able to use that now over the next coming months while we're doing this, looking into this retail unit. So it's been helpful.
Michael, we've a question in the Q&A, just in terms of the mentors and the business advisors. Somebody asking how these are selected. If I come to you on that one.
how they're selected for each of the applicants. If that's the question, many of the applicants actually do come through the Go For It program, where they're matched with a business advisor. And if the diagnosis is that startup loans is right for the business at that point in time, and they go through the startup loans process, it's very likely that we will then rematch that business advisor as a mentor going forward. Then the other criteria can be used, looking at perhaps some specialisms of the mentor to match that with the particular type of business or sector that the business is in. We would match mentors on that basis. In relation to then how we, it's not a case of select, engage with mentors and business advisors throughout the North across all of our programs, including startup loans, because we're engaged in we're connecting with about 4,500 businesses every week. At the moment, we have about 140 associated mentors and business advisors, both full-time and associated part-time with the network. And that's a case of those relationships that developed over time, and when new consultants, advisors and mentors come along, they apply, they talk to us, and we engage them dependent on their areas of expertise, their capability to provide guidance and support and impart information to businesses. So hopefully that's answered the question, how we engage our mentor network, and then how we sort of select and match. It's more about matching to the applicant.
Okay, thanks. And just to close the session, Michael, I think it's fantastic to hear the positive impact that Startup Loans has had on these two businesses and the future growth plans that are there. But if I can just have one quick fire question for you before we close. For those businesses that sort of fit the bill in terms of eligibility, what's the next step from here? Should the accountants and the advisors be signposting clients straight to the website for an online application, or is it a case of encouraging them to contact the local enterprise NI office?
I think if accountants on the call or advisors are confident that they're eligible, meet the eligibility criteria, and that they're ready, so that all of the documentation is in place, and that they would be confident for the client to approach the assessment of personal affordability, the business viability, and the credit worthiness checks. Well, then, that would be straight to the website. They will then be registered, and because of the BT code or their postcode of their business, they will be directed back to the Northern Ireland team, and they get the guidance through the process. But if if you feel that your client maybe has a documentation, or in many cases an awareness, we heard it today from Rosanna and Will, maybe an awareness of what's available. If there's an awareness deficit, if there's a confidence deficit, or a documentation deficit, absolutely, you can contact Enterprise Northern Ireland or the local enterprise agency or business centre. There's 44 locations. We do run the Go For It program that provides a no cost to your client development of their business plan and the development of a strong cash flow forecast. Two of the big documents for the application process. We also run regular confidence building and awareness building workshops, which are brilliant to signpost your clients to help them in that early stage of the process, build up their awareness, their confidence, and the quality and content of their documentation to make them loan ready. Perfect.
Okay, well, look, thanks all for your contributions there. Great to hear the stories in terms of the businesses, and I wish you both all the very best with the future growth. Thanks, Michael. And we'll move on now to our next session, which is Donal Leahy from Small Business Loan Fund. So very much on a similar thread in terms of debt finance options that are available to support startup and micro SMEs. I'll hand over to you, Donal.
Susan, good morning, folks. I'm going to do a quick slide, and it'll be a fairly brief overview on the Northern Ireland Small Business Loan Fund. What we always say to everybody is, if you are interested in coming to the fund, well, then it is a case of coming and having a chat with ourselves. There's always different unique. The Northern Ireland, this is the second iteration. The Northern Ireland Small Business Loan Fund 2 is part of Invest.
Donal, sorry to interrupt you there. We can't see your slides, just if you
Okay.
if you're sharing.
A minute. Yeah, it should be picking up. Now,
It looks to be it now, Donal.
As I mentioned, as well, the Northern Ireland Small Business Loan Fund 2 is part of Invest's Access to Finance strategy. It was the second iteration and was launched in 2018. To date, over 3 years to date, we've supported 160 businesses totaling 5 million. The main area that we look to, as well as to try and help, is obviously to come in as an alternative source of finance to help businesses maybe where they have been not been able to access the mainstream finance. Key features for the fund: so our loans range from 10,000 up to 100,000. We look at both startup and existing businesses. Cut-off is typically 2 years to be determined as an existing business, and at that stage you can obviously apply up to 100k. Interest rates are set out below, 8% fixed for startups, and then for existing businesses we're talking 6% fixed. Loans can be from 1 to 5 years, and then obviously one of the big features that we find for ourselves is loans can, if they are loans are repaid early, well then interest rates do typically apply. What can the finance be used for? Two big things that we look for, or that we have assisted in throughout the years, has been working capital finance and capital expenditure. They're your two big ones that lots of people come to us, especially growing businesses who just need that little bit extra finance to help, whether it's to employ that extra employee or get that next piece of machinery. Unfortunately, there is one or two exclusions from the fund. Coal, steel, and obviously agriculture is our main one, of prime producers, or restricted from assisting use if there's obviously other supports available. What we look for successful funding of applications: well, borrower's background, credit history all come into play. Obviously, if there is a poor credit history, there is a bit of discretion there where we can look at the history and see what the scenario is with each individual. Funding requirements, company structure, staffing, management, the products and the services proposition, and what kind of business operations are there, business finance. Normally, when somebody comes to us, the two things that we look for fairly quickly will be set of financial accounts for you. 1 or 2 years set of financial accounts for you have, and maybe 3 to 4 months of business bank statements. If we can get them, it just allows us to open up the conversation, get an idea of where this business is, and be able to see where it assists at that stage, and give them that early indication. This is the level of finance we believe we can work at that stage, and we move on and we do an application if we feel that there is a good opportunity to assist. How do you apply? Well, it's just visit the website at nisbf.com. Inquiry, telephone numbers. Obviously, in the current circumstances, we're working remotely with my colleague Michael and myself. And my contact details are below, so it's just donal.leahy@nisbf.com and contact me for there. That's just a very quick overview in relation to what the fund can do and things like that. We manage, the fund is supposed to be managed by the Ulster Community Finance in partnership with Enterprise Northern Ireland. Ulster Community Finance is a subsidiary of social enterprise organisation Community Finance Ireland. So we've experienced and we're able to run this fund over a number of years at this stage, and we're still very much open to this.
Super, thanks, Donald. And another really important source of finance for SMEs at the beginning of that growth journey. Great to have the contact details on the website there for people to follow up on. We'll circulate the slides after the event so that everybody has that detail to hand. Okay, so right on time, which is excellent. That wraps up our first half of today's session. Thanks again to all our speakers. We're going to take a quick 5-minute comfort break now, just to let everybody stretch their legs and get a coffee. We'll be back sharply at 11:05 when Mark Sterrett, also of BBB fame, will welcome you back and introduce our not-to-be-missed panel discussion on debt options to grow and scale a business. Okay, thank you. See you shortly.
Morning, everybody, and welcome back to the session today. Hope you all had a chance for a cup of tea or a coffee or some sort of other refreshment or a breath of fresh air. My name is Mark Sterrett. I'm the director with the British Business Bank, as Susan mentioned before, and I have responsibility for the team in Scotland and Wales, and I shouldn't say it, but my favourite child here in Northern Ireland as well. And Susan has done a brilliant job with the Institute, I think, in putting this session together so far. I'm delighted to get the chance to take you through the next 40 minutes or so in terms of hosting this panel session. I know the guys have a lot of knowledge and wisdom to impart, so looking forward to hearing what they have to tell us and what they have to say. In terms of what we're going to cover on this, there's going to be three things I want to really get across in the next 40 minutes. One is to hear from Ronan about, well, introduction to himself, but about Pivotal and what they have done in terms of where they come from, and then obviously in terms of what their plans are, and tell us about their amazing growth story. Two, I want to learn more about how funders can and do work together on deals. So it's not about one funder, one deal. How can they come together and make those things really good? And then thirdly, what debt funding options can a business that's based here in Northern Ireland expect to have access to if they want to use debt to help the business to grow and scale? So in terms of just a bit of housekeeping, yeah, any questions, please put them in the Q&A function. We will do our best to either put them to the panel as we sort of take through the next 40 minutes. If we can't get to them, we will come back to you separately offline and give the answer to that. So that's the introduction. Ronan, I'm going to come to you first. If you can just do a brief introduction, hello, say who you are, what you're about, and then tell us about Pivotal, what you've done, your aspirations for the future, and I suppose the role that debt funding has played in that story.
Yeah, hi Mark, good morning everybody. So my name is Ronan Harper. I am a chartered accountant. I'm the CEO of the Pivotal Group. So essentially what Pivotal are, we are a transactional management group. And what we do for our customers is that we can provide merchant services, we can provide ATM services, and we importantly can provide cash management services to our customers. And with the cash management services, what that includes, it includes cash supply, cash collection, and cash processing. So in other words, I suppose for our customers, what we do from their initial transaction right through to having value in their bank account the next working day, we can manage that process for them. We can de-risk it for them, and we can do all that while saving them money at the same time. So that's what Pivotal are about and what our core service offering is. I suppose at the moment we have fairly ambitious plans for growth. We're sitting at the minute with 7 locations across Ireland and the UK. We have about 270 employees across all of those locations. And if you look at our website, we're actively recruiting. The last time I looked, I think there was about 50 key positions available for us to join our overall expanding team. So that's Mark, who we are and what we're about in terms of the Pivotal Group and myself. Yeah,
that sounds great. So all applications rolling straight to your inbox for a future career at a winning employer.
Well, I would direct them to the website rather than clogging up my inbox. I'm on annual leave this week, so they mightn't get a response straight away.
No, that's great. Listen, in terms of that's good context. I'll be honest, Ronan, I didn't realize the scale of what you had there in terms of headcount, which is fantastic. Yeah. In terms then of how debt, I suppose, and financing has helped you over the recent past, how has that unfolded? And obviously looking at a couple of guys on the panel have had a part to play in that as well.
Yeah, I suppose, like, even to answer that, Mark, we have to kind of take a step back, I think, to sort of around the COVID time and how we've come out of that, I suppose. So, like, we didn't escape it at the same time as a lot of other businesses, and a lot of your participants would be advising clients around that space as well. So we didn't escape it. There was a lot of difficult decisions, and we had to really rebase our business from summertime last year to make it more dynamic, and we had to try and deal with the rolling lockdown. So I suppose in one respect, from summertime last year, we were sitting there trying to deal with the rolling lockdowns. So sometimes I refer to it as trying to drive a car at 100 miles an hour in dense fog. You couldn't really see what was in front of you, and we were having to be really dynamic, and things were changing week to week. And there was a danger, I thought, that would consume us. And we had to take a step back and look at what we wanted to do as a strategy, as a group, and our ambitions. And as I said at the outset, we're really, really ambitious. We have strategic plans to grow our business significantly across Ireland and the UK over the next 4 years. And simply put, we can't do that on existing working capital. So we had to go and we had to look at the debt position for that. So I suppose we have had when it comes to debt for us and for me personally, it's not as if Pivotal are doing business with different banks. It's like, it's back to the old cliche of people do business with people. And with our people, we had a fantastic relationship already with Barclays. We also had a fantastic relationship already with White Rock. And I was looking at those two funding options, and I suppose I was looking to utilize both of them because they're different, but they both complement each other in a unique kind of way. And plus the fact they know each other and they get on well with each other. And that always helps when you're trying to sort of go to two providers to look for funding. So with our growth plan, we sat down probably in January of this year. We spoke to Barclays, said this is what we want to do. We spoke to White Rock, this is what we wanted to do. It wasn't as if, we were keeping someone outside the door. Both of them were in the room at the same time, and we were talking to both of them at the same time. And that was really transparent for us. It was kind of the culture that I wanted. And it worked really, really well. Gavin knows Una knows Gavin. And, from that perspective, having Barclays as our mainstream bank providing term debt to us, but also White Rock being there. And Una will probably give a bit more context around this, but White Rock are not a bank. I kind of look at them as being that quasi-equity partner as such. And that's what I was looking for. I was looking for partners to kind of take this journey with us, coming from, a resized business with effectively a clean slate, I think, right, to try and accelerate that growth, particularly across the UK market. So I think for us, once we kind of set out our stall and says that this is what we wanted to do, and the fact that the two guys knew each other, and that I suppose we knew our numbers, both Gavin and Una understood our numbers, and they supported what we were trying to do, and they bought into our vision and shared our vision that we had for growth. Una and Gavin might disagree with me when they come on talking later on, but for me it was relatively painless, because it just worked and it gelled quite well, and it was great to have both of them at the table, because it gives me that nice blended form of debt, sort of quasi-equity partner finance to fund the business going forward.
Excellent, that's great. Una, I'm going to come to you just next in a second. I will test that theory of Roland that it was relatively painless. We'll see what your view on that one would be. Una, looking really just, if you could introduce yourself when you first come on, that'd be great. And then just, I suppose, explain to us what sort of deals that White Rock look at, and that Roland's put the context there, almost like a quasi-equity piece, how that sort of manifests itself and what type of companies you're interested in supporting.
Yes, thank you, Mark. Good morning, everyone. It's great to be part of this morning's session. Una Warnick, I am head of portfolio at White Rock Finance. So for those who are not aware, White Rock Finance is a fund manager based locally here in Northern Ireland. We currently have 3 debt funds under management, one being the Growth Finance Fund, which Susan touched on earlier and is supported by BBB. So we have combined funds there of 115 million. As head of portfolio, I suppose my role within the business is really to manage the relationships with clients across all 3 of our funds and to source and execute new opportunities and deals. To give you a flavour then of the type of funds and deals that we do at White Rock, as I say, we have 150 million of debt funds, and they are available to Northern Ireland SMEs. And that's across a broad range of sectors. There's a small number of sectors excluded, like the Small Loan Business Fund. But over the years, we have funded sectors from technology, manufacturing, right through to gin and whiskey distillers, again, which can be a good perk at times. With regards to ticket size, our loans will range from 100k up to an upper limit of 2 million. And I suppose looking at the type of things that we fund, our funding is really to support any form of growth opportunity. And I think initially when we set up, our funding predominantly would have been used for general working capital purposes, but over the years, those uses have grown. And I suppose just to give a few examples, it can be used for CapEx, deposits on asset finance, to help businesses fund stock and to invest in labour, and also some of those softer areas such as advertising and marketing, which at times traditional banks can find a little more difficult to support. And as Ronan has already alluded to, we do very much see our funding as complementary to existing sources of finance, and including the senior debt provider. And it's very important to us that businesses have that strong support of their senior debt provider. But our experience more recently is that it's becoming more and more common that businesses will have a range of funders. I think gone are the days where businesses just had one traditional funder and stayed with that funder throughout the life of the business. And as a business grows and evolves, I think the needs of that business in terms of the type of facilities and products will also change. And it's important that businesses move and grow and change the facilities as that need changes. Touching then on Pivotal, so as Ronan said, we do have a great relationship with Pivotal. We provided an initial facility back in 2016 out of Growth Loan Fund 1, which is now fully deployed, that fund. And I suppose the purpose of that facility at the time was to allow the business to accelerate their growth plans at the time. There was a lot of change in the sector, and there was a big opportunity for the business there to increase their market share across of Ireland and GB, which they have very much successfully delivered over the past 4 or 5 years. The more recent facility that was provided in a couple of months, again, was to support their business. As Ronan said, they have very ambitious growth plans, a very ambitious management team, and that growth is focused around geographical footprint, opening a number of new premises across the UK and Ireland, and also to allow the business to adapt in terms of their product offering. And obviously, there has been a shift in terms of cash and use of digital payments, and their new product offering will allow them to go out to customers with a full solution in terms of transaction management, whether that be using cash or digital. Just to pull out a few of the key strengths and aspects which stood out for me when, I suppose, considering the Pivotal opportunity. Firstly, it was the ability for the business and the management team to demonstrate a core profitable business there with regards to the cash management division. They have a good track record in terms of their trading performance and financial position. Secondly, again, our funds are there to support high growth opportunities and the growth opportunity ahead for Pivotal, as I said, with regards to the new premises and their product offering. And thirdly, but definitely not least, would be the strength and ambition of the management team. And just to elaborate, I suppose, on a broader context, as a lender, the strength of the management team is a key factor that we will consider when looking to do any funding into any business. We are relying, I suppose, on the strength, skills, and probably more recently required the resilience of the management team to drive the business and that strategy. And it's really key that, you know, we have that trust and confidence in the management team, which certainly Pivotal have displayed throughout the relationship, and particularly Ronan in the last 18 months throughout all the uncertainty of COVID and Brexit. So overall, very, very positive relationship there.
Excellent, that's brilliant. Thanks, and that bit about the management team and the strength and importance is so true, I think, from any funder's perspective. And hearing Rosanna and Will speaking before the break as well, you can get the sense of the passion and the knowledge that the owner has for the business, which does give great comfort when looking at something. Thanks for that, Una. Gavin, I'm going to come to you next. Obviously, you mentioned there of Barclays and the role you had to play in that. And speaking from an ex-banking background myself, there was a time when banks might have wanted to keep all of the deal to themselves. And if there was another funder on the balance sheet already, you may have looked to step back. But in this case, you're quite comfortable. And is that something that's peculiar just to this deal, or would you see that banks and Barclays particularly have an appetite to work with other funders now?
Thanks, Mark. And firstly, good morning, everyone. Yeah, my name's Gavin Campbell, Relationship Director at Barclays Bank. So it's my role is to manage a portfolio of customers, but also look to grow that portfolio. My own focus is around sort of 6.5 to 50 million of turnover, very much looking after their daily banking needs. So yeah, Mark, it's an interesting point, and I know there's other bankers on this call. So I suppose generally, historically, we would have seen SME-sized companies very much banked by the one bank as such sort of thing. But I think over time, and Una's already alluded to it, they've had to look elsewhere. And I suppose this first of all came in probably around asset finance, was probably the first sort of facilities that were banked by other institutions. In terms of the opportunities I'm seeing now, I'd say around 50% already have another funder in place. Very seldom now am I seeing a sole bank opportunity. Is this an issue? Not at all. I mean, we work with a range of different providers. I think my initial job is to very much scope out what Barclays' appetite would be and what the debt capacity within that company would be. Yes, selfishly, I may look to do everything is there, but for logistical reasons, for management reasons, they may not want that. They may want to keep, a few other options open. And I think probably through COVID and things like that, that would be prudent. And I know there's a lot of advisors and accountants on the line. I think as advisors, that's be something you'd be talking to your companies around and making sure that you have options, and perhaps not even directly working with another bank or another institution, but at least having that relationship part. I think that's very key in all this as well, is that you maintain solid relationships throughout, and Una alluded to it in terms of getting to know the management. And it's likewise for management, I suppose, get to know their funders and their opportunities there are around that. So Mark, yeah, look, we see a real mix at the moment. We're not against any funding proposal that comes through this. I do assess sort of where our own appetite would be, and then happy to engage with the likes of Una and others to take the opportunities forward.
Excellent, that's good to hear. AJ, coming to you next, and Una, once I've heard from AJ, I'm going to go back to you actually and just ask a question about what happens to those deals that maybe you can't support. But before we hear from you, Una, on that side, AJ, just want to first of all introduce yourself, if you would, to everybody that's here, and then once you've done that, just talk us through the type of funding options that might be available to a growing SME that sits outside perhaps that bank overdraft and bank loans, and your experience of that.
Sure, thanks, Mark. Yeah, my name is Ajay Sharma. I'm Senior Commercial Manager for CS Finance. We're a commercial finance brokerage, and we source commercial finance for clients in the UK and Ireland. I suppose in the last 5 years, we've done thousands of loans ranging from 50,000 up to, I think, 15 million was probably our biggest. So there's quite a wide range. Obviously, as the guys have alluded to already, the funding options in the alternative finance space have grown exponentially since probably the financial crash in 07-08. The majority of alternative lenders provide term loans, whether that's secured or unsecured, to the business. And then we do have obviously more specialized financial product providers who do invoice discounting or asset finance or card transaction type finance. We find in Northern Ireland, we have access to, I think, over 30 alternative funders at the moment. These range from lenders such as Funding Circle, who most people would have heard of, who lend to established trading businesses. And then obviously then we're into the more sector specific lenders. So for example, some concentrate only on property development finance, some maybe bridging loans, others would maybe just do the asset finance or the invoice discounting. So there's quite a range of products available to clients, and it's about understanding and matching what their actual needs are.
That's great. Just to follow on from that, AJ, would you find that those funders have as much an appetite for business based, in Northern Ireland as they would do for business based elsewhere across the UK?
Yes, the majority of alternative lenders are very willing to support NI businesses, and what we find is the growth of high tech companies, the likes of Funding Circle, their job is just to provide finance to trading businesses. So geographically, they don't really mind where it is. What we've found interesting is none of the challenger banks have moved into Northern Ireland yet, but certainly most of the alternative lenders are very willing to support businesses here.
Super, that's great. Thanks, AJ. Una, just on that question I posed before, so you'll get, I'm sure, countless applications from different businesses, different stages, and some you'll do, but there must be some that you don't. So just around those ones that you aren't able to support, what's the method that you go through in that side?
Yes, Mark, certainly, I suppose just to put it in context, I think with our first fund, GLF1, we must have received, I think, close to about 800 inquiries overall, and obviously weren't able to do all of those for various reasons. I think there was just over 100 facilities put out under that loan. So inevitably, there will always be applications which, for various reasons, whether that be from a financial perspective, whether it's too early stage, we obviously are a debt product, so we will look at debt repayment capacity, and also there is eligibility criteria that needs to be met within our funds, albeit it is quite broad. So in terms of clients or applications, we will try and point them in a direction, whether that be another funder, such as the small loan fund, or again, we have quite a good relationship with advisors across Northern Ireland, who may then be able to provide the applicant with other ideas in terms of sources of finance or types of funding available. Obviously, there is the broker route in terms of AJ, and I suppose we have just recently set up a commercial property division within White Rock as well, and that was partly driven by the fact that, you know, we were having to turn away so many applications for various reasons. So we will try and point people in the right direction.
Excellent, that's great. And Roland, turn to you just on that side. So Una mentioned there about the use of advisors and networks and how that helped other businesses come together. Were you comfortable when you went looking for the finance that you sort of knew the landscape and knew the options available, or did you sort of work with an advisor on that side to help you navigate what was available?
Yeah. So Mark, from my perspective, we did it all in house. You know, my background is I'm a chartered accountant. I've got experience in this field. I have used advisors previously, and they've been great from that perspective. You know, but it was probably time for me just to sit down internally and crunch the numbers myself and get comfortable with the numbers myself. I understood the process, understood what the likes of Gavin and Una would look for, some of the key metrics that I had to, you know, demonstrate to them in terms of, as Una mentioned, repayment capacity and servicing levels and stuff like that. You know, but I suppose I'm probably in the fortunate position that I have a bit of background in that, and there's a lot of businesses out there I would suggest that just don't. So in my past experiences where we have used advisors, you know, I think that has been key. And, you know, the only thing I would say to those advisors when they are advising those clients from that perspective is, you know, if you look over the last 12 months, the whole banking landscape has changed a lot, I think, right? And what was critical for me, and I suppose this is where, you know, Una and Gavin and I had that sort of come to Jesus meeting at the very outset to say, listen, guys, you know, am I talking to people here who know their credit committee? Because I don't want to get through, you know, a large, long process to get to the end of it where it doesn't actually work. And I was assured of that at the start. And, you know, that actually came through in abundance, you know, so there was no surprises with them. So I think what's key for your advisors here is that whenever they are sitting down to act for their customers and their clients in this, they really need to back the horse to say, listen, we know the credit committee here, the people who we're dealing with in these funding organizations, whether it's a mainstream bank or an alternative source of funding, that we know their process to get this through credit. And we can read that, I suppose, because you always have that nervousness that we will spend, you know, a couple of months crunching the numbers, getting all the paperwork ready for maybe to be turned down at the end. So I suppose given the relationship we had with White Rock and with Barclays, you know, I was really confident, and I suppose that's down to the credibility of Una and Gavin. I was really confident at the outset that it was going to work, you know, that they bought into it and they knew their credit people. So yeah, I suppose from my perspective, it was just Joe Soap. They didn't have to engage on the advisor perspective.
It's great advice, actually, Roland, and even that bit again about the strength of the people and the relationship. So you're just saying is ask the question up front, know what you want to achieve from the process, and have the confidence in the people, therefore, that they're clear on that and they can help you deliver.
Yeah, it's just too important to get it wrong, you know, and it takes a lot of time and a lot of energy and a lot of manpower and a lot of cost internally if you look at it from that perspective. So yeah, that just at the outset for me was, you know, and I'm sure Una and Gavin will remember the day that I eyeballed them and sort of said, you know, you know how to get this through credit and you know what they're looking for. And basically, if Gavin said that it's going to go through, then it's going to go through. And if Una says it looks good, then it looks good. And, you know, I needed that confidence at the start because I suppose, and it's easy to look at it in hindsight, but I was a little bit nervous that, you know, given COVID, you know, I wasn't as close to the credit committee and the financial institutions as they were. So I was trying to leverage from them on that to say, you know, I need you to read this for me. You know, is this going to work? Is it not? You know, are you supportive? Are you supportive of us at the outset? Are you not? So let's have those big boy conversations at the outset. And once we get that elephant in the room established, let's plow on from it, I suppose.
Excellent. That's great. And Gavin, turning to you on that side, it must be great to have a founder or a business owner or chief executive who's that committed, and you can see that commitment from the outset, and someone who's not necessarily passive around it. When an application comes to you, can you sort of talk me through what is the process you go through? I'll be slightly flippant on this from an ex-banker's perspective. Is there not the risk that you'll simply look at the assets, you know, the value of the field, and do a straight percentage, or how do you actually go about assessing the ability to repay that facility?
Yeah, no problem. Yeah, look, very much so. It's a blended approach. Security is, of course, important. I'm not going to say it's not, but it's not really the principal one. The primary one would very much be around cash flow and debt service. And so that's become even more prevalent in everything that's gone on from the financial crisis right through to COVID and things like that. So it is about sitting down early. It's not a case of just getting presented with a set of numbers. It's much more around the detail behind that and buying into, I suppose, management's view of the numbers and where they're going. So trying to get a more trended or a blended trading performance over the last couple of years. So very much looking at, yeah, what can the company very much service comfortably with an element of headroom, because there will be ups and downs in a business. But also then looking forward, projections are really important. Obviously none of us have crystal balls and we can't set them in stone sort of thing, but having that belief in the management that they at least have a direction they're going on, and all things being equal, they're going to be able to deliver on them. So a lot of, I suppose, what we're putting in place is very much for the now, but also for the future. So in that, you are having to make a commitment with the company that you'll be there to support them in the tougher times. So to the advisors and things, I'd say, yeah, get close to numbers, engage with the companies as well. So then you're coming to your bank or a number of banks to put that proposition to them. You know the detail behind the numbers as well and why some of the trends are coming through the way that they are. So security, Mark, yeah, look, absolutely, as a bank, tick, we'll have it, very much so. And it varies, you know, bricks and mortar type security is very much one thing, but also debtor book security is important as well. So there's real value behind a debenture as well now has really been looked at, rather than a generic overdraft secured against the debenture, leave it at that. You may look at the value behind the debtor book and maybe covenant against that, maybe 2 times the debtors or something like that. So it's looking at a real blended approach, I suppose.
That's great. And even we sort of speak about banks as homogeneous, you know, all banks together, but I presume each bank has its own appetite. There must be deals that you've perhaps passed on and seen them successful elsewhere, or perhaps picked up that someone else hasn't, and the message would be to get across that a no from one bank doesn't necessarily mean a no from all banks.
Yeah, look, I'm not on to down my competitors on this space, and you know, being honest, all banks will have slightly different approaches to things like sector, to facility structures, to debt capacity. So that's why it is important to get out into the marketplace and sound off and find out which bank maybe is right for you in terms of that side of it. But the point is coming across, I think, a lot is this engagement and people. At the end of the day, look, as senior lenders should be broadly around the same lines, and pricing will always come into it. And look, that is a key factor. But I guess my ask would be very much that you do take a rounded approach in terms of what the business needs. And companies should have confidence in their banks to be able to deliver. I suppose that's the speed of a decision or the speed of the turnaround, and also that face-to-face engagement, early doors. Are you speaking to someone that can sort of make decisions or at least stand over them? sort of thing. Do they know their internal processes, timescales? Are you confident around, can you actually deliver? So look, all banks are different, and it depends very much in terms of their own, I suppose, funding cycles, where they're at. So yeah, don't take a no as a complete no. Bank will look at this. Get out there and speak to other banks as well. And I think a point was made earlier, like even in the SME space, we would see companies that are dual banked. So certain parts of your business may be better suited to one bank, other parts maybe with another one. So there's plenty of opportunity, I suppose, to get out there and talk. And there's certainly appetite at the moment for us to lend, and it is a key bit. I suppose what we've seen is deposit balances have grown, I suppose, in this sort of period, and rightly so. Companies have retained cash to prepare for what may come down the line. I guess now it is very much about getting out again and moving things forward. So we're very much looking to speak to companies like the guys at Pivotal, who are very much focused on the future and the opportunities that are out there. Absolutely supporting our existing customer base through whatever challenges may be there, but very much looking for those progressive, forward-looking companies.
Excellent. That's great. Thanks, Gavin. AJ, just turning to you, obviously you've shared with us that you're a broker, you have a number of different funders. I think you mentioned maybe about 30 different funders on your panel, essentially. So the challenging question to you would be, if you're a business owner or an advisor, why come to AJ Sharma or another broker for that matter? What do you bring to the table that adds the value for them in terms of accessing that finance?
Well, I think Ronan touched on it earlier in terms of wanting to have the confidence in whoever your advisors are or whoever's working with your company in order to get whatever they need done. So I think to use a broker, I think there's probably 4 main reasons. First of all, it's time. Time is critical on deals and with finance. So a broker should have the knowledge to assess your lending proposition very quickly and identify the lender or lenders who are most likely to have an appetite for the deal. And when it comes to the lender's point of view, they know that applications coming from the broker will usually be filtered and packaged towards what their appetite is. And they usually have then their BDMs ready to then process those applications on a timely basis. So a broker should always be able to give you an answer quite quickly. It's not always yes, but one way or the other, it'll be yes or no pretty quickly. The other thing then is choice of panel of lenders for a start. Rather than go one by one around all the banks and then potentially not get finance and then not know where to go after that, a broker should be able to say, well, look, we have a wide panel here, let's approach them all. And there are also some lenders that only go through brokers, the likes of Adam Bank. They only want to do commercial lending through the broker network at the moment. And it's important as well, the brokers will understand what the actual financial solution sometimes is. You know, a good example is we had a lender during COVID, a client during COVID who was in the care home sector. And whilst that client was under a huge amount of pressure, his business was actually doing very well. And he wanted to reinvest and upgrade a lot of his homes in terms of making them COVID secure and et cetera, et cetera. So he needed about probably $1.5 million of capital. Now, his bank was willing to give him a CBILS loan of that size. However, this client had promised his wife after 2008 that he would never sign a personal guarantee ever again. So he was refusing to do that. But when he came to us, we were able to tell him that we could get 6 lots of 250 of CBILS loans from 6 providers, and he wouldn't have to sign a PG. So we were able to raise that money for him, and he was able to go and actually put that money into his business. And hopefully now he's seeing the benefit of that capital. So another thing is then how to present the package. Obviously, every lender has their own criteria, their own lending appetite. So a broker will know whether that lender is focusing on loan to value or percentage, for example, of GDV, or whether it's trading history or what potential recourse it is. So the broker will understand how to package a proposition specifically for that lender in order to try and maximize the chance of success. And I think that the final thing is the broker's interest should be aligned with the client's first and foremost. So one, it's our job to get the money. And the alignment of interest should be reflected in, for example, the fee structure. So we really only get the majority of our fees if we get the client the money, and that's only right. So, you know, when a client understands that the broker is going to do all that work for them, potentially approach 5 or 6 different lenders, then, you know, it's a no-brainer for the client to say, yeah, thanks very much. I'd appreciate if you would go and do that.
Excellent. That's great. So essentially, I'm taking two things from that. One is that you guys, I suppose, know the landscape, you know the map, and how to get to the destination quicker. And probably just as important is if you make a promise to the wife, make sure you do your best to keep that promise. Is probably a good thing. Yeah, that's true in this house as well. Guys, we're coming towards the end. We've got about 5 minutes left, and there's been talk on this and really good chat about the need to look to the future. So, Ron, I'm going to come to you now in this question in terms of looking to the future. And the topic of net zero is absolutely there. It's front and center increasingly in terms of how business need to approach their strategy and what they want to do going forward. So, and I'm going to come to each of you other guys as well to get from a finance lender's point of view. But to what extent, if any, and if it's not, please do feel free to share that. To what extent is net zero, ESG, COP26 is coming up? Is that beginning to come into play when you build your strategy and when you think about finance and think about your business aspirations?
Yeah, Mark, absolutely is the short answer to that. I suppose, with our ambitious growth, we want that footprint nationally across the UK in particular. And, with the funding we've received, we've taken on 2 of 3 new sites. The third one will happen towards the end of this year. And that gives us national footprint across the UK. But what we are increasingly seeing now is, much more emphasis on tenders where, these national, not even the national contracts, but contracts of any size really, where, they're looking to see what our agenda is in relation to net zero. So I don't think, even for a business like us, there's no getting away from it. And I suppose, we have to demonstrate to those potential customers that we have the same values as they do in terms of trying to do something in that space. Like, I don't think anybody's ever going to be brilliant at this, but we all have to start somewhere. And we have strategies and plans to do that in terms of, we are just about to launch new route optimization for a lot of our vans on the road, which will, we've actually rebalance some of our vans to be more fuel efficient. So from that, we'll get more fuel efficiency around that. We have other technology that we're implementing around, the fuel efficiencies. We are looking at electric vehicles. We're sort of like halfway through a process of getting our first electric vehicles, particularly around the CBD districts, and seeing how that works. So we're very much on a path where we can demonstrate to our new potential customers that we have the same core values and same governance as they do, because in my experience, that can be a differentiating factor that will help us secure that contract as opposed to some of our competitors. So it's definitely on our agenda. We're definitely in that space. I'll be honest, we're not brilliant at it now. It's going to take some time to get there, but as I explained to my guys, is that the train is very much on the tracks, and maybe a bad use of an analogy when we're talking about net zero, but the electric train is on the tracks, right? and it's moving now, and we're definitely heading in the right direction in that space, but we can't get away from it.
Excellent, thanks. Good save there, Ronan. I'm going to come to each all. If you can do this as one. So speak once and then pass the baton on. So 2 things. One, is net zero coming into consideration from a financer? So I'm going to come to Gavin, Una, and AJ in that sequence. Is net zero on your horizon? And then finish with one piece of advice to a virtual room full of accountants in terms of debt finance and how they might use that to grow. So we've got about 2 minutes to get through the 3 of you, and then last words will be to Ronan to finish on his one piece of advice as well. So Gavin first, then Una, then AJ.
Yeah, no, very much so. I mean, as a company, I suppose in our own right, we've set ambitious targets, Mark, around this. So to be a net zero bank by 2050, that covers both direct and indirect emissions. Indirects, I suppose, what you call finance emissions, so the emissions of your customers and facilities you provide around that. So that's very much a focus now, in that we've already met the net zero in terms of direct. So in terms of facilities providing, structures we're doing, it's very much like a Paris Agreement and aligning to those. We've also committed to provide about 100 billion of green finance by 2030, roughly around 32 billion lent to date. This is around sort of green loans and green trade finance and things, which I suppose carry recognised industry accreditation. So that's useful for customers as well on their side, in terms of some of the projects that they're going on and funding that specifically with a green wrapper around it. And also we have a sustainable impact fund, 175 million to lend over the next 5 years to green startups. So if we're looking very much at innovations in that space. But I suppose in the ground where I'm seeing it most, and this is my second part of the question too, is really around the customer engagement bit. So hearing Ronan talk about that is music to my ears. Next week, we have a client focus week solely on this topic. And myself as an RD and across the whole country has been tasked to have meaningful conversations with the majority of our customers next week in this subject. So we have lots of resources to hand. We've got lots of literature around that. So it's very much, I suppose, a value add knowledge share sort of approach, not really around specific products or opportunities, much more around helping everybody on that journey. And between us all, we can get there. So I suppose my own bit was really just, if there's anybody out there needs a bit more information, don't hesitate to pick up the phone. More than happy to share some of this stuff.
Brilliant, Gavin, thank you. Una, very quickly on net zero, and then one piece of advice.
Yeah, net zero, again, yes, I think over the last 18 months, it's definitely moved up the agenda in terms of discussions, and it's an area that our investors are very keen to look into and to monitor. I suppose in discussions with our portfolio companies as well, again, you can see that it's very much becoming critical, as Ronan has already mentioned, in terms of doing some of the tenders, whether they be big or small, there is now a heavier weighting on that ESG piece. And when we are doing our credit papers up to our investment committees, again, we now have a section on ESG and what our funding will do to help impact that. So again, it's an area of focus. I do think it's one where it will be important for companies, ourselves and investors to understand that it's not necessarily financial versus ESG, that they can both be aligned and work in parallel, as opposed to having to give up one for the other. In terms of one piece of advice, just with regards to that complementary piece, and when assessing the overall funding package, I think it's important not to look at one facility in isolation, and to look, I suppose, at that blended cost and compare that to what that funding will allow your business to achieve in terms of growth and return.
Excellent, brilliant, thank you very much. And AJ, I'm going to push you on time with this one, so try and keep it punchy.
No, you're okay. Well, net zero, exactly as Una said, and certainly it's becoming more prevalent. All the alternative lenders are taking cognizance of it, but I think they'll let the primary lender, if you like, the banks, take the lead when it comes to making sure clients have policy, etc. in place. In terms of a piece of advice, obviously one of the key messages was how funders can work together. We've had a fantastic example, obviously, with Pivotal, and it was good that Ronan already had relationships with Barclays and White Rock. I just wanted to give a quick example. We had a manufacturing company that won a multi-million-pound contract in Canada. And this was going to take this company on to a new level in terms of the size of client that it would have. Now, its own bank actually phoned us and said that the company needed £750,000 of working capital to secure this contract through. But they were only able to offer 600,000. So they asked us, could we help? We were able to get the other 150 from Funding Circle within 5 days. And that company is now thriving now and got more clients now in Canada.
Excellent, great story.
So it's important to ask for help.
Ask for help is always a good mantra. Ronan, Absolutely. You've got about 10 seconds. If you
well,
give
I can do it in 10 seconds, Mark, because that's the way we work at Pivotal, right? We can deliver on it. But listen, you'll excuse the analogy, but my last piece of advice is that, you know, employees are your engine, right? And what we've just embarked on is a new innovative piece of technology on workforce excellence. And, you know, having agendas and governance and, you know, electric vehicles and all this route optimization, all these bits of fantastic stuff on the net zero angle is fantastic, but you have to bring the people with you. So, and I think we're engaging in innovative technology where we're going to change employee behavior to sing those values all day long and to bring them with us as part of that journey.
Brilliant. Excellent, Ronan, and thank you all, Gavin, Ronan, Una, and AJ. Fantastic contributions to that session. We said at the start, we'd hear from Pivotal and your amazing growth story. We'd learn about funders working together and also learn what debt funding options that the business in Northern Ireland can have access to. I think we've achieved all those things. We have slightly overrun, so Susan, I apologise, not ask me to help out on things in the future. I'm just going to hand across now to Jennifer Tankard. I met Jennifer for the first time a few months ago, actually, in a virtual capacity. She's from UK Finance. I was struck by two things. One, she really knows her stuff, so she's an expert on this. She's going to talk to us about how the finance world is helping SMEs transition to net zero. Also struck by just how busy she was. She had so many things under her sort of umbrella of work portfolio. So really appreciate your time, Jennifer, in terms of supporting this event today. And with that, I will pass across to you. Thank you.
Thank you so much, Mark, and thank you for inviting me to this event today. I really appreciate it. So for those of you that don't know, UK Finance is the trade association. We represent about 300 financial service organisations across the whole of the UK. I sit within the commercial finance team, working on a whole range of issues in relation to access to finance for small businesses, including net zero. So I'm just going to pop up my presentation. So hopefully you can all see that now.
Yes, Jennifer, working well.
Brilliant, thanks. So I just wanted to give you a bit of background. I mean, obviously, a lot of you know a lot about the SME world, but given the importance that SMEs have to the UK's economy, they do have an absolutely critical role to play in helping the UK achieve its ambitious net zero goals. But having said that, you know, not all SMEs are carbon intensive industries, and overall it's estimated that UK SMEs produce about 12% of total UK emissions. And those obviously vary significantly by sector. So 2019, it was estimated that about 25% of emissions came from the transport sector, 21% from energy supplies, 17% generally from business, 15% from the residential sector, and 10% from the agricultural sector. The main source of emissions for many SMEs are transport, energy use, and property. So a number of people have said on this discussion already about, you know, there is that focus from some SMEs on moving towards net zero goals. But I think you really have to remember the context of this for businesses in the UK at the moment. So we've been through Brexit, which has had significant impacts on many businesses. COVID-19, obviously, what we're seeing at the moment from both Brexit and COVID-19 is a lot of skills and staff shortages, as well as supply chain disruption and price inflation on a range of sort of products and materials. There's also the fact that many businesses only have a 7-year life cycle. So a lot of businesses aren't thinking, well, I'm still going to be around in 2050. They may have set up a business for a short period of time, or it might, for a lot of startups, it might just be something they're looking to do, you know, whilst there's disruption in the economy. So trying to get those businesses to engage with longer term goals can be quite challenging. And there's also, we've had feedback from some of the business trade associations that I speak to all the time that, you know, we've got a current cohort of business owners that are sort of 55, 60. They've come through COVID, you know, and found that incredibly challenging. And are now actually thinking, do they want to be around for the future? Is now the time to wrap the business up or to pass it on and just, you know, sort of move into retirement? And you'll all know as well that whilst there's a huge amount of really good business advice and tools around out there, it's incredibly fragmented. So businesses really struggle to navigate to where they need to on most issues, including on net zero and how to achieve those. So somebody told me recently, apparently there are already about 300 different carbon calculators in the UK. And I heard about the case of one business that was being asked to, you know, had one product that he was applying into 2 corporates, and both those corporates were asking that small business to use 2 different carbon calculators. There's some work to do, I think, in trying to make that more coherent and in trying to help businesses navigate and use the right tools. Having said that, coming through COVID and Brexit, we've seen a lot of businesses do very well. A lot of people have used it as an opportunity to demonstrate agility, and they've innovated to do new things in new ways as well. So I think when we're thinking about SMEs and encouraging them to move forward on net zero, it's sort of a bit of a carrot and stick approach for some. So there will be an opportunity to reduce costs. For example, if you can achieve reductions in energy use, that can drive costs down, and that in itself can help increase competitiveness. And for certain markets and certain customers, there's definitely the potential to enhance brand appeal. I think there's an assumption that all consumers are going to be driven by that brand appeal and driven by companies that are moving to net zero. But I think at the moment you have to remember a lot of consumers are under a lot of financial pressure. So that's not always going to be the case in all circumstances. Price will still be a strong motivator for a lot of customers. And in terms of sticks, we've heard again from the speaker just now that when companies are entering into contracts, increasingly there will be a requirement for companies to demonstrate their net zero credentials. Larger businesses are going to have to start complying with the government's carbon budget requirements. And so in order to do that, they will start pressurizing smaller suppliers to help improve their own green potentials so that they can meet those targets. So I think we've got that, those things coming in from both directions. And what we see, there have been a number of surveys recently looking at small businesses' attitudes to net zero. So generally what we're seeing at the moment, and this will probably accelerate as we get closer to COP26 and as this becomes a bigger issue, but we see a small chunk of innovators and enthusiasts who really are picking up steam, getting on and doing stuff, maybe setting up a business that's just all about innovating to help achieve net zero goals. We see a large chunk of businesses who really want to do something, but they're not really sure what they need to do and what the easiest wins for them are. And then we see quite a big chunk that at this point in time are really not engaging at all, partly for some of the reasons that I spoke about earlier. They've got too many things they're already dealing with, they're struggling with changes that they've been through from COVID. And it's just, they just don't have the headspace to engage with net zero at this point in time. So how can we possibly accelerate the pace of change? Or business trade associations, advisors, accountants have an absolutely critical role to play in giving that advice to businesses, both about where they can go to find information and what they need to do. A lot of business trade associations have already moved and are moving to provide resources and advice in good practice case studies, so the NFU, SMMT, who represent the automotive industry, and you'll all know about the ICAEW. Plastics, there's a plastics trade association. They have some really interesting stuff on their website. So I would say go to your business trade association in the first instance and your accountants and those people that you know that you deal with on a regular basis. I think we also all know that SMEs tend to learn from their peers and tend to look to other market leaders for to get that information. So finding good practice case studies and sharing those is a really important way of demonstrating how businesses can go on that journey. And I just will mention as well, CBI have just launched their own decarbonisation team and a Goal 13 impact platform, which is available to all businesses, not just their members, to share good practice. So anybody can go on there, I think, to share good practice about how they're achieving those goals. But I think as well, businesses will always want to be looking to government grants and incentives, and some of those are out there at the moment. So again, advisors and accountants can be thinking about what that grant and incentive landscape is looking like and signposting them to their clients. We are, I think everybody in the business space, us included, are really trying to push the government to be a bit more consistency about policy direction and frameworks, because I think, again, at the moment, businesses are a little bit hesitant to jump in certain directions because they're not sure if they're going to jump on one type of technology, for example, and then find that they've made that wrong choice. And you're seeing that very much in the vehicle market at the moment, where only 2 years ago, all the talk was about electric vehicles. Now we're talking about hydrogen fuels as the possible solution. And just looking at electric vehicles as well, I think, again, businesses are nervous about, if they switch to electric fleets, is there the charging infrastructure that they need to complete those business journeys? So I think anything that can be done at a national government, at a devolved government level, to help create that consistency and certainty for businesses is essential. So just going to thinking about investment and thinking about debt finance, I think first of all, starting about, before you think about taking on more finance, about, well, where can you reduce savings in the first instance? So we've talked about, reducing energy use, reducing transport use, and we had some good examples of that earlier. And there is big potential for savings from cutting out waste in businesses. And that in itself is an opportunity for businesses to think about those savings, working with their advisor to identify those and get those down, to then reinvest those savings into net zero adaptations. I mentioned earlier thinking about other sources of investment from different places and looking at grants. And then there's some new schemes around corporation super deduction tax, which is available for 2 years, is something that could be used for on-site renewables, for example, or energy efficiency measures. But again, businesses would need to get good advice on that. And I think when we're thinking about debt finance, again, we need to think about the context of that. We've seen a lot of businesses taking out C bills and B bills. A lot of the businesses taking out B bills, it was the first time that they'd ever taken on debt finance. So giving them the support they need to manage that debt finance is going to be really important. And businesses need to be thinking about maybe debt finance isn't the solution if they already feel a bit overloaded by the debt finance they've got already. And I've just, these are British Business Bank figures about access to bounce back loans, and you'll see there that businesses in Northern Ireland, did get a good chunk of facilities available for investment and help them get through COVID. UK Finance produces an SME finance monitor at regular intervals, and so I just thought it'd be useful, again, by way of context, to understand some recent figures we've had from that. So 1 in 5 are now using more finance than they were before COVID-19, and many borrowing, as I said, when they weren't before. But we are also seeing significantly high levels of deposits. There's a lot of liquidity available at the moment. So a lot of businesses actually took out bounce back loans, promptly sort of put them into a business savings accounts, and they're still sitting there. So some of those businesses will still have that headroom. Some of those are now being paid back because businesses don't want that debt finance on their books. But that is an opportunity to think, if you've still got that money, how you're going to use it. But some SMEs, there's a lot of caution out there, and some SMEs will still be very worried about, are they going to get through the next 6 months? So we'll be wanting to use that. But throughout the whole of the COVID crisis and Brexit, we are still continuing to see a large number of SMEs in the category of what we call happy non-borrowers. So they'd just rather not take on debt finance and just rather work through cash flow and other sources of cash in order to manage their business. So I think we're constantly having an interesting dialogue with business and business trade associations about whether SMEs need green finance or whether they just need finance to go green. And I regularly have the conversation with businesses and trade associations when people say, well, we want more green products. It's like, well, specifically, what do you mean by that? What is a green product? What do you want from that green product to do for your business? Or are you just looking for investment finance to help you go green? But there are sources, there are green products out there. But as I said, there's also a lot of liquidity available. There are a lot of different sources of finance as well. So there is a lot of support from the debt finance industry, and many lenders are offering a wide range of support, including help and advice and carbon calculators. As I said already, quite a lot of those around. And a lot of the large lenders do have specific products. So Lloyds Banking Group have a partnership with the Woodland Trust to incentivise farmers to plant more trees, and a clean growth financing initiative to provide businesses with discounted lending for green purposes. And Virgin Money, for example, have done a partnership with the Future Fit Foundation to look at sustainability-linked loans. So there are those products there, but as I said earlier, I think the most important starting point is to think about what is your direction of travel? What are you starting, what do you want to achieve? What are the changes you want to make? And therefore, what financing is right for you? Sometimes it might be a green product. Sometimes it might just be a business as usual debt finance solution. It's great to hear that Barclays is having a week next week to start engaging with businesses, and many lenders and some of the smaller specialist ones are starting to do that a lot as well, and to think about the support and help their businesses need and have those conversations. And businesses shouldn't be concerned about entering into that dialogue with their lenders. Nobody's going to expect you to have all the solutions, or for businesses to have all the solutions already to hand, but they'll want to have a feel from you about what is the sense of direction you're going in, and what are your priorities. You know, is your priority fleet replacement? Is it about reducing energy costs? Is it about investing in new technology? You know, for example, apparently some new air compressors coming onto the market that have really significantly reduced energy levels. So, you know, you need to have sort of worked that through in your own head, or businesses will need to have worked that through in their own minds. And we'll see significant variation within that by sector. So what works for a business in, you know, agricultural sector be completely different from a business that's in, you know, service industry sector, for example. So the most important thing is to work out, or start working out, that plan. So what is the role of accountants and other advisors? Very much is about looking at how you can reduce that waste and tracking where those savings are being made from those reductions in waste, and changes to your existing business practices. And having a think about how you build that into business plans when approaching lenders. So it may be that you're thinking, well, okay, we're saving X on energy, that, you know, energy use, that's not that interesting, but it is interesting, and it's part of the wider story to tell. I talked earlier about helping to identify grants and incentives and tax benefits. Sharing good practice really critical, so that you can, you know, if businesses are struggling to think through what their journey might be, that you could signpost them to other businesses that you've seen in a similar sector, and sources of advice. Incremental change is absolutely fine, and businesses should not be pushed to take on too much change at any one time, and change they're not comfortable with. So the small easy wins is sort of the way to like engage the whole business and think about this. You know, this isn't going to be a really difficult thing to do. We can make some changes that will help to make a difference. And trying to do one thing rather than trying to work out what the right thing is to do. So you can be working out, you know, one thing here or there, whilst coming to your own, whilst businesses come to their own concept about, you know, what that direction of travel is. Businesses are under a lot of pressure to accelerate their digitalisation journey as well at the moment. We've got Making Tax Digital 2 coming down the line. And again, that is an opportunity as you digitalise to think about how that could apply to other parts of the business, and whether that could help you achieve your goals. So that was all I had to say.
Thanks for that, Jennifer. I know the UK network team within BBB conducted our own net zero research with intermediaries just a few months back, and our findings very much support what you're saying there in terms of the SME perspective and the varying degrees of engagement with the whole net zero topic. I guess, you know, getting on board with the net zero concept is one thing, developing a net zero strategy is another, but businesses really need to be able to access the finance to implement these strategies. And I think it's fair to say there'll be a big reliance on the advisors to help the businesses figure out what that funding package might look like. Look, I had hoped to put a question or two to you, but in the interest of time, I'm going to have to cross over to Alan. So thanks, Jennifer. A really important issue, and I think one we will undoubtedly hear a lot more about in the coming months.
Thanks so much. And sorry, Susan, I think if you're going to share the slides, I've embedded a number of links of helpful advice that might be useful for people.
Great. Thanks, Jennifer. Okay, Alan, without any further ado, I'll hand over to you.
Thank you, Susan, and good afternoon, everyone. And thanks to the British Business Bank and the Institute for the opportunity to speak with you today. I'll just share my screen here, if I might. And Jennifer, you could just confirm that has appeared.
Yeah, that's working okay.
Okay, grand. Well, look, like I say, thank you everyone for staying online. To introduce you to Upstream. Upstream Working Capital have been providing working capital into the local business community for over 10 years now. We are the only privately owned working capital provider in Northern Ireland. What you will see in the coming week, we're delighted to say that we're now part of a wider group called Cubit Trade Holdings Europe Limited, whose aim is to deploy over £500 million of working capital into the GB and Irish SME and corporate markets. But although we're part of a larger group now, our DNA remains effectively the same, and that is to provide the local business community with funding in a positive and timely manner through the provision of working capital products, namely invoice finance and supply chain finance. And it's actually this latter product that I'm going to introduce to you today. Most of you already have knowledge of invoice finance. Supply chain has really come to the fore in the past year, and I'll go into a bit more detail around that. Sorry, that's not moving on. Oh, there we go. Okay, so the British Banking Association just under 3 years ago carried a survey within the business community and with the business representatives, and there were 3 key findings come out of that. The first one being that access to finance was identified as a real key concern of the business community. The second finding being that banks weren't reacting properly or giving the products that the business community wanted in terms of provision of working capital. But the most alarming figure of all is that quotation at the bottom, that 74% of SMEs in the UK would rather forgo growth than borrow money from a funder. Now, obviously, then on top of that, we've had Brexit and the pandemic thrown into the mix. So the situation probably hasn't improved. And I think what we're going to talk about today is just our responsibility as funders and as advisors and as educators, that we try to drive change and improve access to finance going forward. So as I mentioned earlier, specifically, I'm going to talk about supply chain finance and why it's more relevant now than ever before, and how we're going to try and bring it into upstream, or focusing on bringing this into the working capital suite of products that are available to SMEs and corporates. If you're not already aware, global supply chains are seriously clogged up at the moment. This is principally drawn by the impact of COVID, and specifically the impact of lockdowns in various parts of the world at various times. It just simply means it's more difficult getting product from point A to point B in the world. This has driven shipping costs, for example, up massively in recent months. And to give you a feel for just the impact that has had, pre-COVID, the cost of shipping a 40-foot container of product from China to the UK or Ireland was in and around $2,500 US. That would move up marginally from 1 month to the next. In July 2021, the same cost for the same container was $15,000 on average, so a 6-fold increase. But the problem doesn't actually just stop there. What's also happening is that the logistics firms are actually seeking payment for these containers up to 6 weeks in advance. So it's not just the cost that has increased, it's the actual length of time that companies have monies out the door to fund this transaction. So if you think about the impact, not just of the massive cost increase, but the extension of time of getting product from point A to point B, and the impact that's having on companies' working capital cycles. And that has to be funded somewhere. And that's why supply chain finance has become such a huge issue. So how does supply chain finance work? Well, actually, it's really simple. What happens is that we or any other funder will step into a company's supply chain, and we pay their supplier on behalf of the company. We then, as funder, would be repaid when the company have received those goods and sold them on. And that can either be a standalone product, or it can be supported by an invoice finance line. So whenever the company makes a sale, they clear off their supply chain finance with their invoice finance. And in terms of the security that would support typically a product like that, we're happy to take a look at a variety of options, from fixed charges over assets, supported by a debenture, which again can be first or second ranking debentures, so we can get security in place for that. To support our view that this is a critical market, McKinsey produced an excellent report at the end of 2020, stating that about 80% of eligible assets are not benefiting from better working capital financing, and the remaining 1/5 of assets are inefficiently financed. So there's a huge area of growth there. Other banking products are now ingrained in people's thinking as to what's available. Supply chain, not so much, and that's something that we think there's a huge area for growth for. There have been improvements in recent years, but to be honest, it's been pretty slow. McKinsey also produced this report just to I suppose just show where supply chain funding sources have come from and are moving to. So historically, you'll see it was almost exclusively bank funded through letters of credit or overdraft. That has moved on. Non-bank funders have increased their offering online. Banks have reduced their funding in the supply chains, but you'll see that fintech has now very much stepped into that gap. And as you can see, then in the future, we see that only increasing in the fintech space. That there are specific supply chain funding products that are going to be available to SMEs and corporates. And really, I know it's a cliche, and this has been a whistle-stop tour of supply chain funding, but the old adage really is as true now, if not more so than ever before, and that's that cash is king, and that companies going to their suppliers with cash in hand and not having to ask for credit are getting better deals and more competitive deals that they can pass on to their clients. I think I've kept it within our time schedule. I'm happy to answer any questions you might have now from the group, or please feel free to contact me following today's event if you have any other queries. Thanks.
Thanks for that, Alan. Just one point, we heard in the earlier panel session how the various types of finance and indeed providers work together to deliver a funding package that works for both the lenders and the businesses. Is this the case with upstream as well? You know, can you provide that supply chain funding or other working capital products in conjunction with other lenders' working capital facilities?
Yeah, that's one of the major changes in the past few years, Susan. Historically, funders would have been a little bit more protective over their customers and allowing other alternative funders in. That's no longer the case, and I have to say that the products that we offer, and I know Gavin from Barclays touched on it earlier on as well, there is a much more of an openness to have specialist products coming from the appropriate provider, and much more openness particularly from the banks to allow alternative funders in. You know, if someone goes to their mainstream bank to seek that funding and it's not available, it is therefore only right that they're allowed to go to another provider such as ourselves. And invariably we'll find that's the opportunity for us. Companies will go to their own banks first. It just may not be a fit for the bank's credit policy, or they just might not have a product that fits for it, and then they can come to us. So that's been working really, really well recently, and we've now provided joint facilities with a number of and actually all the banks we're now in an agreement with on providing additional and alternative finance.
Good, and I think, you know, it's probably fair to assume not all SMEs will have that awareness of, you know, all the providers that are out there. So there is that onus on the advisors and the accountants on the call today to make sure their clients are aware of all of those options.
Totally, that's it. That's right.
Just in terms of the supply chain funding, tell me how would a trading company benefit from having access to this product as opposed to other forms of finance?
Well, the way we look at it is that, you know, if someone is looking for property debt, they'll go and seek a commercial mortgage. If they're looking for finance for plant and machinery, they'll go to asset finance. If they're, you know, if they need short-term funding for expenses, there are overdrafts in place. So there's a product in place, and there's invoice finance, of course, for the sales side. the one glaring gap to us was supply chain finance. So what we're saying to clients is, look, you have these products lined up for all of your other banking requirements. Why not have a specific supply chain funding line as well? So it is literally looking right across all of the gambit of products out there and putting supply chain just in exactly the same way as your asset finance, your commercial debt, your overdraft, your invoice finance, and just having a specific line set aside just for your supply chain.
I guess it comes back to what we said at the very outset. It's about identifying the right type of finance to suit the business needs and making sure that they get the most appropriate package. Look, Alan, I think in the interest of time, I'm going to have to leave it there with you, but thank you very much for your contribution there. It was really good.
Thank you.
Karen, if you would do the honours for me, please, and just launch the poll to close. So I can just ask you to take a minute to complete the 2 short questions for me, just in terms of how you found today's session, and then any actions you may take off the back of it. That'd be much appreciated. You know, getting the feedback really does help us shape the future events. So look, while you're doing that, I just want to say a huge thank you to all those involved, our speakers, panelists, the Institute for hosting us, and you, the audience, for giving up your time to join us. If you haven't already signed up to the other 2 Funding Future Growth webinar series, please do so. Next Tuesday, the 21st, we'll focus on finance for scaling businesses. We have another great lineup of speakers there. We have insights from Irene Graham, CEO of the Scale Up Institute, and first-hand experiences from Hugh Cormican of Seardan and David Ferguson of Bob and Burt's on how equity investment has transformed their growth journey. And then on Tuesday, the 20th, we'll turn our focus to angel finance, when we'll be joined by Rod Beer and Jenny Tooth of UK BAA, Mark Brownridge of the EIS Association, as well as a panel of some of NI's most active and experienced angel investors. So look, that's all from me. Go enjoy your lunch and hopefully see you all again in a week's time. Thank you very much.